crypto and Bitcoin bear market is here. Do you think the bear market is here for crypto and Bitcoin? Look at this. The dump is happening again. Bitcoin is down what? Like almost 4%. ETH has gone ahead, dumped 7%. So as you know, I just made a video yesterday saying that Bitcoin should get to this 105, 104 area. We got to 105. And ETH, I made a video the day before saying it should get to this 35.80 area. What is this? 35.80 area, right? Well, 35.90, 35.80, let's call it. And we've just pierced that. Why is that? I said, look, it's going to get retested. It's going to get retested. That was literally 2 videos ago when I made the video. And yesterday I said Bitcoin 105, 104K area. There's a logic to this as well. You've had this bottom here, this bottom here, this bottom here. They're all around this 106.14 area. We can see that, right? 106.14. So then what happens pretty much is that traders would go long like 50x, 100x, and so they set their stops right here. They assume there's a lot of buying support right here, 106K. So therefore they set their stops right here, right here, right here, right here, right here, and they go long. Of course, the exchanges, they know that. The big exchanges such as CZ and his Binance, they can see your orders. On the big exchanges, they can move market prices. Like smaller exchanges can't really do this, but that's when big exchanges like Binance smashes price through here and takes out all the longs, flushes out all the stops here. Can it go further? Are there still folks who set their stops under 102, 103K? Yeah, there's some of them. Could they go even further and take out those stops? It's entirely possible, right? But yesterday, my prediction was I think they're going to get to 105, 104. That was yesterday's video, and as folks can see, that's pretty much what ended up happening. Like this is literally 24 hours later. One thing I'd say to folks, not to be too pessimistic, is that right now everyone's gone pessimistic. The whole board is going all green. That means everyone's shorting, right? Everyone's shorting. If this was normal, right, then the price would be like 0.01%, 0.01%. When people are shorting, then we go into green territory, and then that means the funding rate is much lower than 0.01%. Like for example, here on ETH, it's going to negative territory, right? So when the market is this short, then basically I'm expecting prices to do a squeeze up, Like every video I've been making for the last 2 weeks, I said, look, I think it's going to be basically a crab walk between this price level. The last 2 videos, I said, look, I think we bounced to about 118K area, right? Why is that? Because this significant trend line, see here, boom, right here is 118K right now, right? 116K, as we all know, is here. I think we get here and wick through. Like it respected 116K really well these few times, but other times it wicks through. So I think we're going to get a situation. Next move is up to 116K, probably 118K wick through, 117.8, and then come down and do something like this. This is not any news, guys. I've been posting these charts everywhere. In my Discord, on social media, this has been happening for a long time now. I've been saying, look, this price fractal is basically May 2021, and we're going to get these wild swings up and down, right down, and then up. So basically, eventually resolving to an upside thrust. The reason for this is because we've seen these sort of flushes all the time, and May 19th, 2021 was one of them, and that's why I use this fractal, right? This is not the only one. In this fractal, we could go back down to 100K, right? I'm not sure about that, but here's another fractal. This is from August 5th when the Japanese yen carrier trade got reversed last year, and boom, on the Binance chart, because yeah, they pushed prices down that low, then boom, we bounced up to 120K. We didn't do that this time, and boom, even by this optimistic chart, right? Even by this very optimistic chart, it's still indicating we make a move down to 105K, which is where we are right now. Look, I'm not saying that it can't go down lower and retest 100K. It can do that. But in general, I'm expecting a situation where we sort of swing wildly and then bounce up. But what's going to happen to the altcoins, right? You ask. before I answer that question, first let's answer the question of which crypto exchange does Pablo Jimenez use? Well, Pablo uses exchange that's non-KYC. That means you don't need to show any ID. That means even the exchange can't see who you are, right? The IRS can't see you. The tax office can't see you. The FBI, the CIA, nobody can see you, right? Total privacy. That's why Pablo made this deal with them, exclusive Pablo link, right? Win up to $6,000 plus 2 ETH. All these great prizes just by depositing. Win $20 bonus, right? Deposit $500, win $100 USDT bonus. All these 20% bonuses, right? Great campaign, but only on the Pablo Jimenez link. Now, if you're watching this on YouTube, then the link is in the description below. The link is in the description below. But if you're watching this on some other platforms, such as this one, right, that's okay. Just click on my profile page, and there is my link tree or stand link, and it should be the first deal that pops up because this is a great deal. Okay, let's get back to the markets, folks. But remember, this deal is only on the Pablo Jimenez link. Only on the Pablo Jimenez link. Doesn't matter which scenario happens. I think we're basically headed up, right? Why do I think we're headed up? Okay, here are a few reasons. By the way, this is the guy. This is the 100% win rate trader. Everyone thinks it's Byron Trump because he shorted Bitcoin and ETH just before the dump, just before that big crash on October 11th, which was like 3 weeks ago. And he's now in the red. He's now in the red. All the profits he's made, 30 mil profits, he's now in the red now. He's now down 8 mil. He's been adding to his longs. I can only assume that Byron, if that is indeed huge Byron, but it's definitely some insider in the White House, is now expecting Trump to tweet some very positive news. And he's hanging on, trying to tweet some very positive news. Whilst he's trying to do that, Binance and Hype and all those guys are saying, well, we can't let this guy walk away with $30 million. We're going to basically try to crash this guy out and flush this guy out. They're trying to flush him out and make him hit his stop losses, right? You know how the game is played. It's a casino, folks. You know how it is. So the reason why I think markets are going up after this is because of this. First of all, this just came out today, 2 hours before the market, an hour before the market opened, the ISM manufacturing, right? Prices are down. Market was expecting 62, manufacturing prices down to 58. That means inflation is coming down. That's a very good sign. And ISM, I show you guys this because this is one of the more prestigious surveys out there, one of the more prestigious economic data that the market actually does look at, right? So what's the second one? PMI. ISM manufacturing PMI, we all know how important that is. Look, market was expecting 49.4. We hit 48.7. I mean, China came out with a shocker. It was bad. China landed at 49, and people were talking about that. But US landed at 48.7. And by the way you tell it's bad is when it's below 50, then it means it's shrinking. Manufacturing in the United States is shrinking. When it's above 50, then it's growing. And guess what? I know Trump's been trying to bring manufacturing back to America, American manufacturing, all the tariffs and stuff, but now it's shrinking. Right, shrinking. New orders. New orders, basically meaning, are they confident? Are the companies spending money to try to grow, to try to build their factories? It's at 49.4, so below 50 as well, in shrinking territory. When the economy is like this, the Fed tends to cut rates and tend to ease. Now, yes, I know. He said, December rate cuts. We're not sure. We're not sure about December rate cuts. I think he said that just to stick his middle finger up at Trump. That's all he's trying to do. What really is happening, look at the markets right now. Markets pricing in for December 10th, it's 70% chance of a rate cut, right? 70% chance of a rate cut. And what was it before? It was 63% chance of a rate cut yesterday. And now it's 70% because we've had the bad PMI data come out. So I'm leaning towards a rate cut. They've already confirmed, the Federal Reserve's already confirmed they're going to cut NQT on 1st of December. There's no debate about that. They confirmed that. They announced that already. What is going to happen now is basically, Pablo's speculating when do they start QE, not QT, QE, which is when the Federal Reserve actually starts printing money. Printing money. You heard that again. QE, quantitative easing, right? And Pablo's been debating people, and Pablo's been having these viral tweets smashing out of the park because most people thought the Fed only pumped like $29 billion in liquidity into the market. Turns out it's more like $50 billion. Pablo got that exactly right. Most big influencers got that exactly wrong. And look, here was the COVID crash. Many economists think that this kind of crash would have happened, just not as steep, even before COVID, even without COVID. Because what happened was the US economy, the US banking system was already in a lot of trouble. And this is why we hope the Fed learned their lesson. This is 100 billion, right? This is the SP 500, by the way. See, this blue line was shooting up to close to 80, 100 billion all the time. And then COVID happens. We had the crash, right? And then this blue line shot up to 150, 200 billion. Now, what actually, that's actually just the overnight treasuries. I should use the correct chart. Okay, here's the correct chart. This is the New York Fed, as I've shown you guys, New York Fed. You can't get any more authoritative than the New York Fed. Their own data saying that during this is leading up to COVID, November 2019, December, January, Feb 2020. So we look at the figures, right? On a day like this, it's 53 billion treasuries and 31 billion mortgage back. So that's like 84 billion. Like on a day like this, it's 60 billion, 30 plus 30. On a day like November 2019, it's 69.7 plus 23. So that's 103 billion. That's 93 billion. And on a day like this, 77 plus 27, that's 104.5 billion. On a day like this, 61 plus 15, that's like what? 76 billion. So we can see the numbers basically just fluctuate between 50 to 110 billion, 50 to 110 billion, and eventually led to the mighty COVID crash, right? When it spiked up to, on this day, March 12th, it spiked up to 184 plus 91, which is $276 billion. And that's the situation we're looking at right now. So what is the number we're looking at right now, right here? Okay, let me enlarge the chart for you. So the chart we're looking at right now, yes, on Friday was 29.4 to 29.95, which is 50.3 billion. But what is it today? What is it today? This is Monday afternoon, US time. They report the numbers in two sessions, the morning session and the evening session. They've only reported right now, I'm making this this video in the early afternoon, Monday, New York time, and they've only reported the early session, which is 7.5 plus 7.2, $14.7 billion. But we don't have the afternoon session yet. Say if the afternoon session is the same as the morning session, that's a fair assumption. So we double that, we get to $28 billion. $28 billion, right? You guys will know what the number is in about an hour, 2 hours from now. And we had 50 billion on Friday. Say if we end up with something like 28 billion today, in about 2 or 3 weeks from now, we're heading to 50 billion as the floor, as the bottom, and 100 billion, and probably 60, 70, 80 billion as the ceiling, right? So when that happens, the Fed needs to pump liquidity into the markets. If they don't, that's when the market crashes, like we saw in March 2020. Without COVID, yes, it wouldn't have crashed that badly, but it would still be a pretty bad crash, right? It would still be recession, and many economists saw that and understand that. The Fed reads those papers, and they've commented on that, and they know that is true. They're aware of it, and that is why they're ending QT on December the 1st, which is 27 days from now, 26 days from now. And my prediction, Pablo's prediction, I've made this public, The first one to call for this is the Fed to start QE money printer in December. All right. Look, folks, I understand why you're panicking because Bitcoin's dumping, but I'm telling you, look, there's not too many things to panic about because look, the if we just look at the stock market is not dumping. Stock market is at new all-time high. The SPY is green, the Nasdaq is green, the QQQs, the Nasdaq 100 is green, right? Basically the market is performing fine, right? There's no reason for the dump today. Here is SP 500, most important stock chart in the world, by the way. Like we're just this close to the all-time high, right? 689.5 was the all-time high on Spider ETF, and today we're at 682. Wow, big deal. We're down 1%, right? Down 1%. It's all greens. It's all greens compared to the Friday close. Right? There's no reason for crypto to be dumping except one reason. What is that? And it's that CZ and Binance are basically crashing the markets, liquidating the longs, right? And I've explained that so many times, right? So what makes me confident that I think we're going to see markets up in the next few weeks? Well, because my thinking is we're going to get QE printer, the printer being turned on. Well, Pablo, you've been saying that the banks are in trouble. You've shown us this chart many times, this chart. So what new tricks have you got? What other tricks have you got, Pablo? Well, I've got this one more trick. It's called the SOFR above IORB. What's the SOFR? That stands for secured overnight funding rate. Overnight meaning 24 hours. You're borrowing something for 24 hours for overnight, right? Funding rate means the interest rate between banks like JP Morgan or Wells Fargo when they lend money to each other. In fact, that's where I used to work, on the money market, short-term money market desk when I was a trader. Secured means we're not just borrowing money from you. We are giving you a piece of paper called like the U.S. Government treasury bill or treasury note, sometimes treasury bond. We give that to you so it's secured. If we don't pay you back, you hold this piece of paper and go to the US government and get your money back, right? Secured. So basically, then you think the funding, the SOFR rate would be kind of pretty much near where the interest rate is because it's basically banks borrowing money from other banks and using treasury bills as the collateral. But look at this. So usually they stay under this ceiling. See this ceiling in the red dot, right? That's called the IORB rate. What is the IORB rate? IORB is basically the interest rate on reserve balances. So reserve balances meaning that each bank has, reserves, whatever like amount of money you deposit at the banks. They keep some of it, they lend most of it out, they keep those reserves, and they park that money sometimes with a Federal Reserve Bank, such as Reserve Bank of New York, Reserve Bank of Philadelphia. It's really kind of what the Federal Reserve pays to the banks. And look at this. We all know this, with the interest rates been climbing, got up to 5.4%-ish area, and then Fed's been cutting rate, and they cut it once, then they cut it twice. What is it now? 3.9%. So the Fed only pays you 3.9%. Fed pays you 3.9%, right? Pays the banks. But what is the rate that banks are borrowing to each other? It's 32 basis points higher. So that's 5.22%. Sorry, 4.22%. The Fed will lend you at 4.9%, 3.9%, but the banks will lend to each other at 4.22%, or 32 basis points higher. We can see it's shot way above this safety ceiling, right? Even though it's called secured, secured overnight funding rate, right? That means you basically are paying giving security, giving U.S. Treasury bonds, U.S. Treasury bills to the bank, and they're still charging so much higher. That's a clear sign of bank stress, banking liquidity stress. The banks are running out of money. The Fed needs to come into a rescue. Remember, Pablo called this, right? QE and the printer is coming in December. I'll catch you next episode.